This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The United States has taken the top spot as Europe's supplier of crude oil, diesel, and liquefied natural gas, LNG, in recent months, capitalizing on reduced imports from east of Suez caused by shipping disruptions in the Red Sea. The U.S. is in top position on basically all the key commodities that Europe needs to buy, Kepler crude analyst Victor Catona said at an industry event in London. The U.S. shipped 2.17 million barrels per day, BPD, of crude oil to Europe so far this month, according to Kepler data. Exports of diesel stood at 207,000 barrels of oil per day in the same period, outpacing Saudi imports of around 201,000 barrels of oil per day.
Oil prices on Tuesday mostly held onto gains made a day earlier amid attacks on shipping in the Red Sea that have exacerbated supply worries. Brent crude futures fell 1 cent to $82.52 a barrel by 0435 GMT, while U.S. West Texas Intermediate crude futures, WTI, rose 1 cent to $77.59 a barrel. Concerns around shipping disruptions in the Red Sea have supported a rebound in the price of crude oil overnight, offsetting a more hawkish Fed currently weighing on the demand side of the equation, said Tony Sycamore, an analyst at IG in Sydney.
Moving on to the top news in the energy sector.
Russia is to ban gasoline exports for 6 months, beginning on March 1st, a spokeswoman for Deputy Prime Minister Alexander Novak, who oversees the country's energy sector, said. Russia previously imposed a similar ban between September and November last year in order to tackle high domestic prices and shortages. Only 4 ex-Soviet states, Belarus, Kazakhstan, Armenia and Kyrgyzstan, were exempt.
Portfolio investors have become extremely bearish about the outlook for U.S. gas prices, even though prices have already fallen to their lowest level in real terms since futures began trading in 1990. Hedge funds and other money managers sold the equivalent of 399 billion cubic feet, BCF, in the 2 major futures and options contracts linked to prices at Henry Hub in Louisiana over the 7 days ending on February 20th. Fund managers have been net sellers in each of the most recent 5 weeks, selling 2,085 BCF since January 16, according to position reports filed with the U.S. Commodity Futures Trading Commission. Next, we have the top news in metal markets. Indonesia's ministry is trying to address delays in approving new mining volume quotas, an official at the Energy and Mineral Resources Ministry said on Monday. The ministry so far has issued approvals for quotas, known by the Indonesian acronym RKAB, for 145 million metric tons of nickel ore and 14 million tons of bauxite, said Tri Winarno, the ministry's director of mineral business development, adding that the focus is currently on RKAB approvals for nickel and tin mining. Indonesia this year extended the validity of RKAB to 3 years from 1 year to reduce the frequency that companies needed to apply for the quotas, but TRI specified that the volumes approved so far are only for 2024.
India is considering an export tax on low-grade iron ore after small steel producers urged the government to curb its overseas sales, 2 sources directly involved in the matter said. China typically accounts for more than 90% of overall shipments of iron ore from India, which is the world's 4th largest producer of the steel-making ingredient. Demand for steel in India, the world's 2nd biggest crude steel maker, has raised iron ore consumption in the country, and earlier this month small steel producers petitioned the Ministry of Steel to take measures to restrict exports to help ensure sufficient local supplies at affordable rates, the sources said.
We will now look at the top news in the agricultural sector.
Indonesia's unblended biodiesel consumption in 2024 is seen rising to 12.5 million 13 million kilolitres from 12.2 million kilolitres last year, an energy ministry official said on Tuesday, leading to a possible fall in palm oil exports. The Indonesia Palm Oil Association, GAPKI, had previously estimated that palm oil exports were expected to fall roughly 4% this year because of higher domestic demand for the vegetable oil as biodiesel feedstock, while production growth remained modest. The world's biggest palm oil producer and exporter has pushed a wide use of the palm oil-based fuel to reduce crude oil imports and shift to lower emission fuel. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.